everyone. Thanks for tuning in. This is episode 6 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data, and I'm here at the star of the show, Jordan Brooks, Market Analyst. Jordan, how are you?
I'm great, Patrick. How are you?
Well, it's the start of a whole new year. It's a whole new start. So your first newsletter article is an actual look back here. It's called Taking Stock of a Wild Year. And wild is a little bit of an understatement in many ways.
You go with a lot of words there.
Really could have. But I think it kind of makes sense to start with more of a general national overview and go from there. So give us some details from that wild ride that was 2020.
Sure. Well, I think one of the main takeaways is sort of the supply and demand angle of this. So new supply actually went up a little bit compared to in 2019. We had a little over 300,000 new units across the country delivered in 2020. And kind of paired with that small uptick in new supply, we had a drop in apartment demand of about 14% compared to 2019. So those two things kind of combined to lead average occupancy down by about 0.5%. But that 14% demand loss actually was a little bit better than things looked earlier in the year. I remember after our second quarter newsletter, we were talking about apartment demand being down more than 40%. So there was at least a nice bounce back in the second half of the year, but we did end up still in negative territory. And then on the rent side of things, average effective rent actually did manage a 0.5% gain. So we lost a little bit of ground on occupancy, but we gained a little bit on average rent. And I think all things considered, given everything that happened last year, those are results that we can be fairly happy with in the industry.
What stood out below national numbers for you?
Well, one of the things that especially stood out, and this is what I spent a little bit of time on the newsletter discussing, was the difference between performance in markets of various sizes. And at ALN, we categorize markets into one of 4 tiers, really based on their size, the size of their multifamily presence. And it was in those tier 1 markets, the largest 33 markets in the country, that they really had an especially rocky year. And in fact, for market tiers 2, 3, and 4, so really all markets outside of those largest 33, both average occupancy and average rent increased in 2020. So a lot of the national number was skewed, of course, by those largest markets, and it was in those largest markets that really the results were the most negative in a lot of cases. So, and then even further than that, really, we can zoom in a little bit more, and it wasn't just those 33 largest markets. 13 out of those 33 lost ground from the perspective of net rent, which combines average occupancy and average rent. So really it was a small subset of markets that really had a tough year, but unfortunately for multifamily, and then when we're looking at sort of the top line national numbers, those are the markets that tend to drive those numbers.
Do you have any specific markets that come to mind that really showcased
The Bay Area,
any of those?
Yes. So the Bay Area in California was pretty hard hit. Los Angeles, Boston, New York. I mean, kind of your main culprits that you kind of just think of given what happened last year. Chicago was another one that had a bit of a rough time. I did profile some other markets as well in the newsletter that don't generally get as much attention as some of those large coastal markets that kind of had a rough year. In particular, there were some small Texas markets, think Midland, Odessa, and those types. So some of the energy-oriented markets, some of the small areas that really depend on public schools and hospitals for employment struggled. And then in Florida, the state did pretty well overall, but Orlando and Miami specifically had a little bit of a struggle. And Orlando both of those markets really, they've got a lot of travel and hospitality type employment. So those are other areas that had a little bit of a harder time.
So what's next for you? Tell us what you're up to. It's a whole new year, so you got a lot of opportunity here for articles. Books could be written about every aspect of last year. Tell us what you're up to.
Yeah, there's a lot of material to cover. Well, yeah, the calendar's filling up already. So I'm going to be doing a presentation next week for the Apartment Association of Greater Los Angeles. That's going to be on Wednesday. If this video is out by then viewers of this can find that information on our social media. I'll also be doing a presentation the following day that's complimentary. It's put on by ALN and the Quadrillion. It's the third of these webinars that we've done. And again, information and registration for that can be found on our social media. It's complimentary for clients and non-clients. And then in terms of our blog, I'm going to be kind of sifting through some of the details of what happened last year that I didn't have space to cover in the newsletter. And the first topic we're going to probably cover there is differences in performance by price class.
Well, you can read all about those on our blog. It's alndata.com/blog. And as he referenced a few times here, you can find a lot of this information, including links to register for some of these limited space webinars. They may be complimentary, but there's limited space. You can find that information on our social media. It's Twitter at ALN APT Data. On Facebook and LinkedIn, you can just search for ALN Apartment Data. There you go. And make sure that with these videos on YouTube, if you're watching it on YouTube, hit that subscribe button that you see pop up. And that way you'll be notified every time that we make a new video. So Jordan, thank you so much for spending some time with me this morning. And I know it was a rough year. I really enjoyed all of your articles. I look forward to what you have coming up next, and we'll see you next month.
All right. Thanks, Patrick. Have a good one.